Over the past week, Facebook stock has dropped over 30%. So is this thing worth 30% less than it was a week ago after breaking record revenue? Let's figure out that today. Let's see if this is a value play or a value trap, depending on how you look at it. It could be either way. So I'm here to help you guys decipher between value versus trap. Their earnings, they broke record earnings, but we did see poor guidance. That's really the sum of this video. So we're going to go into details about that and see what I am doing at the moment and potentially what you should be doing. So obviously to start, we got to take a look at their earnings. The earnings actually, if you were to look at their revenue for this past quarter, wasn't too bad. They missed on a couple of marks, but it was not too bad. It was more so the forward looking into the metaverse, because now these two segments have been split up. There is the Facebook family, which includes Instagram, Messenger, Facebook, obviously, all of those apps. And then there is revenue off of the other side of the business, which is the metaverse. So if we were to look at that in their actual results, the family of apps revenue was all the way at 32.794. And that obviously is in millions. So this is huge scale. But the Reality Labs revenue, it was up from the last year, 877. But the problem that we're seeing with the Reality Labs, which is the metaverse, is this operating loss. You can see that this loss is getting absolutely huge without any revenue to show for it. Now, we expect this, but people are still getting skittish about it because the forward-looking earnings on this is not well. It is just taking from the family of apps revenue, which is definitely not ideal for shareholders. They love this high revenue business model that Facebook has, which just so happens to have a lot of reliance on their advertising business. Like, look at this advertising business compared to total revenue. Still, well over 90% of their revenue comes from advertising. But if we were to look at their expectations versus reality, their revenue was actually right on track pretty much. Their revenue was a 33.67 versus a 33.4 billion expected. So they made this earnings, but the problem is their earnings per share was at 367 versus a 384. That's just meaning that this profit margin is shrinking, and that has a lot to do with reinvestments into the metaverse and into the Facebook app. Their daily active users was also down. Monthly active users was also down by marginal numbers at this scale, but they made up for this by having a higher average revenue per user. So this is whatever. If they reported this and saying they were going to grow 15% in the next quarter, we would have zero issues with them reinvesting into the metaverse. Now, here is where the issue comes. So they said the revenue in the first quarter will be $27 to $29 billion. Now, the analyst expectations for the previous valuation was around $30 billion. But if we look at that year over year, so Q1 of 2022, if we're only at 27 billion, that growth is only 3%. That is very marginal for a company this big that we need to grow at 10 to 15%. Now, regardless, we're still trading at a multiple that I would see out of a value stock, a very value play like a AT&T, a Verizon, something of that nature for a company that is expected to grow in the future, but might have a slower year this year. Now, some other negative things they did include, first of all, they were talking about competition a lot. It's actually one of the first things he opened up is the first is competition. People have a lot of choices for how they want to spend their time, and apps like TikTok are growing very rapidly. And this is why our focus on Reels is so important over the long term, as it is our goal. Make sure that our apps work for the best service for the young adults, blah, blah, blah. They're trying to target millennials, Gen Z, etc. And the way to do that is copying TikTok. Now, the problem with that is this comment right here. On the impression side, we expect continued headwinds from both increased competition for people's time and a shift of engagement within our apps towards video surfaces like Reels, which monetize at a lower rate than feeds and stories. This is the real problem. None of the platforms have really figured out how to make these short 60-second Reels make money yet. TikTok still, the creators barely make anything. YouTube Reels, people do not make anything on that either. It's very marginal. You could have like 10 million views and make like maybe $1,000, which is just insane. If you were to make a standard YouTube video, 10 million views, that would be somewhere in the $40,000 to like $80,000 mark. 10 million views. But on TikTok, on Facebook, on YouTube Shorts, any of these reel type platforms, that number gets cut basically by the 100th. So until someone figures that out, all of these platforms are not going to be really successful with making reels successful, but I'm sure they'll figure that out at some point. But as of right now, this is very true. Their monetization sucks on reels. Every platform sucks. It's not just Facebook for that matter. With all that said, do you think that this stock deserves to go from 300s range all the way down to 226? That's the main question here. So the analyst price targets, they still put this thing at 340, so a mid 300 clip. I have this actually pegged at 318. That's the exact number that I have calculated at its current value. So that's just how I think it should be. That's definitely how I think the future growth is showing. Even if we only grow at an 8 to 10% this year, that's totally fine. We see a really weird shift into almost a recessionary type signals that we've been seeing over the past few months. So if we still grow at a 10% clip throughout a tougher time in the market, our growth should still remain strong, especially once this metaverse either gets dumped and we create all this new revenue. If you think about it, if they just dumped Reality Labs is costing them $10 billion a year. That would go straight to the top line or to the bottom line, and that's how much operating income they would have. So that's a big thing about the margin, is it would absolutely shoot up if they just cut off the metaverse. Now, I don't think they're going to do that. I think they're going to find a way to make this thing profitable. But as of right now, that is a backup plan for them if need be. If we look at this from a charting perspective, we're at 226. If we bring this thing all the way back up to our 320-ish mark, 300 plus, that's a return anywhere from 30 to around 40%. And I think I could see that in the next year coming up to that much, even faster, honestly, if we get better Q3, Q4 earnings this next year. I think Q1, Q2 is going to suck. It's going to keep hurting, but I think we're already at the pit of this as low as we can go. That's of course my opinion, so I wouldn't take that. I would think you would have your own opinion here, but that's definitely where I see it, considering where we're looking at on the technical analysis scale. It's looking like all signs are pointing up. We are extremely oversold at this point, and we are at this strong support / resistance line. We can see that it is really bounced off this line for, well, since early 2020 at that point, and it has stayed either using this as resistance or support. I think we'll use this same line as a support again, and we'll bounce back up. It might drop a little under, it might go a little up, then back down, but this should be a strong line for us. Our next thing to look at, if it does for whatever reason fall down, is the 200 to 205 ish mark. That is another little resistance support line that we should be looking at. Beyond that, the furthest that this thing could possibly go is 180. And at that point, I would be looking at selling any other stock and putting it into Facebook, because that is insane. I'm already getting there right now with the current price. If it drops low 200s, I'm buying more. If it drops all the way down to 180, I'm selling out of something else to buy into Facebook, because this is going to outperform the S&P by far if it drops down to this 180 level, which we are still 20% further to fall if that happens, but we've seen crazier. Even if we look at Netflix, they had something like that happen. We had a big cliff drop, and then we dropped even further, and then we stayed strong, and then we dropped even further for a total fall of near 50%. So it's definitely possible, but it is unlikely that we see something that crazy happen. As for what I'm doing, I basically told you what I'm doing right now. I am buying slightly. Now, I haven't been buying in years. The last time I bought was actually in this 2019-2020 era. So I'm actually almost at break even at this point. But Facebook for me is that 15-20 year hold. I think in 2040, Facebook is one of those stocks that's still going to be there. And it's still going to be one of the more prominent things that we use in our life. Like Instagram, Facebook, I don't see anyone replacing that. They're just too strong. They have too great of a moat, and their market dominance is very, very clear. So I think they're going to be sitting up there with Google and Apple, all these companies in 40 years, looking into the $1 trillion+ market cap, which we were basically at $1 trillion with Facebook a couple of weeks ago, but we have dropped all the way down into the 690, 680 billion mark. So a double in market cap over the next 5 years is very, very probable. So 20+% per year as a return is pretty decent to have such a safe stock, is what I would call it in meta platforms, also known as Facebook. So that's all for this one. Hopefully you got something out of this. Let me know what you guys think of Facebook. Do you think that this is a falling knife, if I'm just catching a falling knife, or if this is a good buy? I could see both ways just because the market is very irrational, but at a 15 times forward earnings for Facebook, company that's still growing decently, even if it only grows 5 to 10% this year and then goes 20, 30, 40 the next years, I'll still be very happy about that. But just let me know what your thoughts are, and I'll see you guys in the next one. I usually make videos whenever I see great deals, and this just so happens to be one. So that's the only time I make videos, is when I think that there's a great deal on the market. I don't just make fluff videos. So if you appreciate that, subscribe to the channel, and I'll see you in the next one. Have a great one. Bye.